Thanks and welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. This week on the Tech Corner, we're going to be revisiting Taiwan Semiconductor. Now, Taiwan Semiconductor is a dominant player in the semiconductor industry space and is actually the world's leading pure-play semiconductor foundry, which manufactures chips designed by other companies. Major customers include Apple, Broadcom, NVIDIA, as well as Qualcomm. The company's core capabilities span wafer fabrication plus supporting services like packaging and testing. Core technologies include logic, mixed signal, RF, as well as embedded memory, which serve high-performance computing, artificial intelligence, smartphones, Internet of Things, automotive, as well as consumer electronics. Taiwan Semiconductor is one of the most direct artificial intelligence manufacturer beneficiaries because it produces leading-edge silicon that powers GPU accelerators, mobile chips, and increasingly custom data center silicon. It is the leading player in the foundry market, holding a significant share at advanced nodes, including 3 nanometer and 5 nanometer technologies. Majority sales are in the United States, with approximately 75% based on 2025 data. Next in line includes Asia Pacific with 9%, China, as well as Japan. Now, Taiwan Semiconductor faces competition from major players. This includes US-based Intel Incorporated, known for its advanced technology manufacturing capabilities, and efforts to expand its foundry businesses back in the United States. Global Foundries is a prominent player in the foundry space, offering a range of semiconductor manufacturing services. And Samsung Incorporated, which is a Korean manufacturer, is a major competitor with significant investments in semiconductor manufacturing, particularly in memory and logic chips. Now, when it comes to unique value, Taiwan Semiconductor's edge is a blend of leading-edge execution plus scale as well as large customer trust. The company continues to dominate advanced node manufacturing while also driving capacity and packaging ecosystems that large customers need to actually ship volume at high yields. It is a key enabler of artificial intelligence hardware due to its extensive customer base, including tech giants like NVIDIA, Apple, as well as AMD. The company's strategic global expansion with new fabrication facilities in the United States, Japan, and Germany enhances its position by reducing the reliance on Taiwan and strengthening its role in the global supply chain. Depending on methodology, market share estimates track the company having around 70% pure-play foundry share of the global market in 2025. This is an enormous gap versus any other competitor. Now let's take a look at some of the most recent news for the company. On January 15th, the company reported its Q4 2025 earnings and sales. Top-line sales came in close to $34 billion, up 25.5% year over year, also beating the estimates by $1 billion. Net income jumped by 35% year over year on an adjusted basis, with EPS coming in at $3.14, besting the estimates of $2.98 by 16 cents. Now, compared to the third quarter of 2025, fourth quarter results represented a 5.7% increase in revenue quarter over quarter, as well as an 11.8% increase in net income quarter over quarter on a sequential basis. Gross margin for the quarter is also quite impressive at 62.3%, operating margin at 54%, as well as a net profit margin of robust 48.3%. And on a forward basis, TSM also forecasted revenue of close to 30% growth for fiscal year 2026. On top of 2026's revenue outlook, the company guided for CapEx between 52 and 56 billion as AI demand drives another leg of build-out. Now, despite the most recent news for Taiwan Semiconductor, let's look at some additional positives. Management's guidance and CapEx posture imply continued tightness in leading-edge capacity. When you break down the revenue mix, high-performance computing represented around 55% of top-line sales for Q4, which supports results highlighted in structural strength with impressive total revenue growth, supported by diversified global capacity and ongoing artificial intelligence and high-performance computing demand. This potentially positions Taiwan Semiconductor as a valuable long-term investment. The company's technological edge and expertise in advanced chip manufacturing ensure its critical role in the AI industry, with strong financials and global presence supporting its resilient growth potential. The company also exhibits, like I said, exceptional growth with estimated forward revenue now over 30%. This is far surpassing the 5-year average, which is approximately 19%. Profitability is also outstanding, with a net income margin now over 43%, much higher than the sector median of around 5%. This shows Taiwan Semiconductor is very efficient in generating profit from its operations. Now, despite many of the positives associated with the company, let's also address, as always, some concerns. Taiwan Semiconductor faces valuation challenges as its forward PE ratio reaches multi-year highs. For example, if we look at the forward earnings multiple of 31.25, this is significantly higher than the average 5-year of 22.5. This has potentially limiting upside performance despite robust financials on a trailing basis. there's also the possibility of production constraints going forward that one needs to be mindful of. The company's reliance on cyclical AI demand and record capital expenditures poses potential risk to future profitability, with geopolitical tensions and high overseas fabrication costs potentially threatening margins. Export restrictions and geopolitical risks also pose challenges, particularly related to U.S.-China trade tensions, which could impact TSM's global operations and its high conviction status as it becomes increasingly tied to U.S. policy and markets. And lastly, let me just reiterate that production constraints do pose risk. If demand stays high and tools and advanced packaging capacity bottlenecks occur, you can get great demand, but also delayed revenue. If demand cools, you're left with a record capex in a decelerating environment. All right, now let's take a look at the technical picture for Taiwan Semiconductor. First off, the technical picture is quite bullish. TSM traded around $350 after the earnings-driven surge. This is a breakout continuation setup of new highs after a catalyst, which is usually bullish as long as the breakout holds. Multiple technical dashboards show price may be extended above key moving averages, including the 20, 50, as well as 200-day moving average, confirming an uptrend, but also potentially signaling short-term overbought conditions. Intermediate and long-term trend remains positive, yet the stock tends to trend near the 20-week moving average, which also suggests the stock may be entering a healthy consolidation phase. Now, taking into consideration momentum, the RSI readings are elevated in the upper 60s to low mid-70s range on the daily chart, suggesting near-term overbought conditions are plausible after the gap. The weekly RSI above 77 also suggests a plausible consolidation towards that rising 20-week moving average that I mentioned earlier. Now, in summary, despite the macro risks, export controls, tariffs, and geopolitics, for instance, and heavy investment needs, Taiwan Semiconductor's leadership, scale, and global footprint positions it at the center of semiconductor, artificial intelligence, and high-performance computing growth. In the most recent quarter, high-performance computing was approximately 55% of revenue, and smartphones, ironically, were around 32%. This is also a clear tell that AI data center demands remain the brightest spot and the biggest engine for Taiwan Semiconductors right now. With best-in-class advanced node execution and deep customer relationships, TSM remains a pivotal enabler of the next wave of compute while pursuing geographic diversification to enhance supply resilience for years to come. And once again, thanks for joining me on the Tech Corner this week. Don't forget to like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.